So I just wanted to go over Apple earnings real quick and I guess go over the moves leading up to it as well. So prior to getting to earnings, throughout the course of the year so far, we ran into this inverse head and shoulders here. And the thing about inverse head and shoulders, as you can see, this is more or less like a downtrend that's going on. And the thing with inverse head and shoulders is that they're usually found closer to the bottom of a or at the bottom of a downtrend, and it indicates a reversal happening. Now, this could be just be a reversal for this year, or we could get stopped out of this, right? Probably could be a reversal, um, according to my analysis, because in the back of my mind somewhere, I think the SPY is going to reach anywhere from 430 to 450, right? A lot of people beg to differ and think that it's going to go the opposite direction sooner than later. So with that said, we see that this was on a downtrend the whole time, and if we were to draw out the inverse head and shoulders, which would be this right here, I like working off of closed bars, not off of wicks. But let's just say this is our inverse head and shoulders right here, right? Then we got two profit targets, right? I know there's a profit target out of the head and there's one out of the right shoulder. Not sure what this left shoulder consists of yet, but I'll figure that out sooner than later. I like to use the left shoulder though as a guide to finding like the area in which the right shoulder should kind of stop at, right? So I just want to do this real quick. If we're using the left shoulder as a guide, you see I'm hitting this bottom of this left wick right here. And if I use that as a guide and I hit the bottom, kind of gives us the point on which the right shoulder should kind of land on. So that's what I use my left shoulder for mainly. But I don't know if it has like any correlation to like where price should land or anything like that. But um, if we were to go here, and that's the bottom of the that's the head. Then if we go here and catch the bottom of the right shoulder, right? So now we have two price targets, right? So the first price target would be the right shoulder breakout, right? So if we were to clone that and we put it right here on top of where it broke out from, then let's take this horizontal ray, right? And if I put that ray right on top of that point, as you can see, that's the top of the first move, right? So now with measured moves, after the measured move is made, there's always a reversal, right? So the measured move was made, then we had the rejection off of that measured move, which dropped us down to 164. Now, this was already retested, right? Came in, bounced down here. So retest this breakout, then it goes up, right? I believe this was this wasn't a retest right here, but let me open this up some more so we can see it a little better. See it broke out, came back, retested this, even dropped a little lower, then it bounced out of here, right? So now this is rejecting, and this is that's the top of the first move, right? Here's the second move, or the height of the second move that it should make. Oh no, that's the first move. I'm sorry. Sorry. So after a little bit of reversing, the second move that it should make should be this one. And I should have just duplicated that, but same difference. So the height of the second move should be this one. And that's why I said that I think Apple was going to like anywhere between 180 and 185, right? So we'll put this line up here. And this is just for y'all. So if we get to like 185.38, 185, and you see the rejection, you know why, right? So now we have this move right here. Now, the reason why I was saying it should reject back to like around 158 is because after it makes the move, it should technically come back to retest the breakout, right? And if not retesting the breakout, it should come back to the first area of support, which would be right here, like 162 or something like that. Between 160, yeah, like 162, 162. Yeah, that's like the area of support. 162, 162. Yeah. So this is like the first area of support, or even this fair value gap, you could say, right? So if I'll draw the horizontal line here, but then I'll also include the fair value gap that's also there, right? So this is the area where it should have came back to. I know earlier I was saying 155. I don't know why I was saying 155. Maybe I was saying something wrong. 155 is up here. And that would be this gap to fill down here. So I know definitely earlier I was saying 155, but I really didn't like comb through it like I'm doing now. So this I'm actually doing while it's recording right now, just to show y'all, especially with these measured moves, to show y'all that I'm not just like doing things to fit my narrative. Um, but it should this was the rejection. I would think that it has a little more downside to that rejection, but we'll find out. So then if we open this up anyway, what's the next thing we can see is that this formed like a channel, right? So let's just use this tool for now. Okay, that's the wrong way to use the tool. Right. So we got this channel that it formed, right? And we see this going up and down throughout the channel, right? Now, if I go back to this 24-hour, so I use the 24-hour because the daily can't see the extended hour. But if you just change the wording, you can see the extended hour on the daily. So as you can see, this was today, right? And this is Thursday. So this was yesterday. This hit our point yesterday and it rejected. That was like perfect, right? But then when you look at this, You see this supply zone up here that wasn't touched until today. So this rejection was correct, but then this supply zone never was hit to really send this ticker like back in the opposite direction anywhere, right? So that's why I was saying like last minute before the bell closed, because I didn't notice this until the last minute. But when I seen that this supply zone was up here and that wick on Wednesday didn't touch it, I said we didn't touch the supply zone yet, and we got to drop and hit this supply zone. Hopefully, it'll hit the supply zone, and then it'll reverse all the way back down, right? So that was my thought on that part. As far as this channel goes, so when you have these channels, target profits out of these channels are the highest point, right? So let me take that out and do it this way. The highest point back to the beginning of the channel. So if the highest point is that in the beginning of the channel, let's just do in the channel. I'm not even gonna mark the bottom width. We just do in the channel right now. If I clone that, then I put it here. Let's say that it does break down from there before it makes the second move. Then you possibly can see like 150. Right? And then if we take this, we just extend it a little more. Right? For this to like break down and take its time, 149, 150 isn't bad by according to this, like sometime in July, like the beginning of July. If it takes its time to break down, right? But you have that move right there. Now that's the full move. Now the initial breakdown would be just the height of the channel. So if we clone that, and we do an initial breakdown, then the initial breakdown should bring us to the 155 point that I was talking about earlier. So that's how I got 155, because it would have been the initial breakdown out of the channel. So I have a target of 155. Not sure when it's going to hit, because I thought that we would have failed earnings and just dropped down to 155. So that's where I get 155 from. But eventually, if we break down, then we go to 150, and then we bounce, or we go to 155 and bounce. Who knows 100%, but I've been trading like this forever, and it always works out like this. So this should come back down 155, which would be a good retest on the head and shoulders, right? On 155, because then when we're talking about these head and shoulders too, right? We have, it's always like a double up on the line, right? So we got this right here, right? So this is also the neckline. Now clone it again, right? Because now we're covering the wicks in the equation, right? Same thing here. When we're talking about the right shoulder, this right shoulder has wicks that need to get covered as well, right? It's a little crooked, but you get what I'm saying. So this right shoulder also has like wicks to be covered as well. And then you see we got this wick out here. Let me see if I remove this. But yeah, that's just the numbers on the regression trend. Um, but yeah, see, we still got all these wicks to get covered as well that are in the right shoulder. So that would make this even deeper and make this even bigger, right? When we do like our measurements. So there is a possibility for this to come down here and retest 55 and then 58. So that's kind of what I'm looking for. Now, off of that bounce, off of either one of these bounces here, I expect the next move to be 185, right? So the ultimate move I expect to see is 185 after all of that happens. But that was just my thought process behind earnings and why I thought it should have came down first. But I should have paid attention a little more and saw that it didn't hit this supply zone first. So that was my whole look on Apple earnings, and I was kind of anticipating that QQQ would have went down off of that as well, but didn't happen. So, but I'll make a video about QQQ next, and yeah, we could talk about all this stuff. But there's a play on Apple, how we got there, what's going on with it, how I think it's going to end up, so forth. All right, study and trade different.